Welcome to the Final Bar, the show where we check out the most interesting charts to get set up for the following week. With some intermarket studies, we'll be finding out the inflection points for minimum risk and maximum reward. I have Gretchen Pitlick, our producer, on board with me. Good afternoon, Gretchen. How are you?
I'm doing great, Greg. How are you?
I am good. I'm a little rough. I'm still my head hasn't cleared from the holidays, so hopefully everybody can make out my voice. Lots to cover off today. We've only got a half an hour, so I'm going to shoot through a lot of stuff. I've got a very brief agenda, but it's a pretty interesting month to do a month-end review. So we're on May 31. I think it's a good time to do that. The indexes are riding the ridge, and I'll try and explain what I mean by that. And then we obviously had big tariff news today, so I think that would qualify as one of the most interesting chart groups to look at. So we're going to briefly talk about that and just see if there's anything in there for us to trade. With that, I'm going to switch over to the browser, and obviously this is an important chart for everybody. This is the US dollar, and what we see here on the far right-hand side is, this moving average just flowing through the chart, and all of a sudden this month, what have we done? We've pushed right back up through it, and it would clearly look like the US dollar wants to head higher. Now there's a little bit of resistance here to give us a reason that maybe the dollar pauses and doesn't break out here. But that's a pretty bullish candle, and we finished very close to the high. And we don't quite have, on this big monthly chart, we don't quite have a turn up on the PPO suggesting that the signal's all the way there. So we could wobble here, and it's a pretty important place on the chart. But I would say that, in general, the bias is starting to really switch. I mean, I've been talking about this since January, but the rest of the world is starting to switch to a bull market for the US dollar, and that bull market is a big decision. So with that, I want to go through some of the monthly charts, but I want to show you why the US market, I would consider it to be riding the ridge right now. So this is the shape of the US market, and the way I got to here was through the homepage, and I'm just going through what's called gallery view. So from members dashboard, if you don't have your own customized chart set up, you can just use the default ones. But when I click on the chart, it'll bring this up. And so I've set up these custom settings. So here's the S&P for 10 minutes over a 12-day period or something like that. And what you see here is, we kind of got up to the top of the area again and we failed. So after making a lower low, we couldn't make a higher high. So that's a bit of a problem. Now, when we roll down to the daily view, this is where things start to get a little messy, and I'm just going to scroll down enough to get the MACD in here. What we have here is a trend line on the MACD that's breaking, and that's pretty important. But the big issue we've got here is that we made this high a low, and we were getting lower highs and lower lows. Lower highs and higher lows, and then we got past this high, so we started to make a higher one, but still hadn't kind of taken out this other peak, and now it looks like we're rolling over again. So we closed today right on the Bollinger Band, the center of the Bollinger Band, which is an important inflection area because kind of you're either above it or below it, and usually when you're above it, it's bullish. So you want to stay there, and the problem we would have is if we're going to get into a nice big raging bull market where we stay above the Bollingers, you want to be long, and the problem here is we're indecisive. We're right on that level. Now, so this is a big issue because we had a lot of selling volume today, and then we also had this PPO or MACD signal break. So that's a concern. But as we scroll to the weekly chart, it gets a little bit worse. And the problem we have here is that on the weekly chart, we have a lot less momentum here than we had back on the highs in January, which is fine. But what we need this to do is turn up meaningfully and really kind of move up aggressively like this area here. And if we're just going to come and touch this line and then roll back over, that would suggest really big selling pressure where we don't have enough momentum to take this market higher. And so we're going to go lower. So that is a big worry for me, and that's what I mean by riding the ridge right now. We haven't got a sell signal, but here's the weekly, and if I zoom in, you might be able to see, here's the dotted line for the Bollingers. We're right on it. On the daily, we're right on it. And so in all of these cases, if we can stay above it, that's pretty bullish. If we can't, that's a problem. So one of the key things to look at when we're looking at the overall market is what's happening in the rest of the world. And so we'll just do a brief trip around the world. And the one thing I want to say is when you look at world markets, there's two ways to do it. One way is to use the actual index from that country, in this case, the German DAX, or to use an ETF like this. EWG would be the ETF for Germany. But the problem you have is that the US dollar affects it when you use EWG. And so, as an example, EWG just gave us a cross this month on the PPO, whereas when we look at the German DAX, we'd had a sell signal a couple months ago already. So the US dollar can play into your charts a little bit. So I prefer, when I do a world tour, not to use US ETFs. I think it's more important to go to the actual country charts because that's what the people in those countries are trading. Now we see a big uptrend line here for 8 or 9 years. And so far it's held, it's really good. But this month we actually had a full reversal candle where we opened lower, or we opened high at the top of last month, went higher, and then closed right back almost at the low, so gave everything back. This is quite bearish after just getting this cross, and so we're not really happy about that. When we zoom in on the weekly chart, the problem on the weekly chart is this head and shoulder structure clearly appears to be in play now, and the PPO momentum is rolling over right at zero. This is exactly what you don't want to happen. This is when the PPO rolled over at zero last time. This is what happens when it goes below zero. Like quickly, when you lose a lot of momentum and you can't get back above zero, usually your markets are in correction. So we have a couple of things going on. On the monthly chart, we already had a sell signal on the momentum indicator. Now we've got a topping structure building where basically we keep trying to retest the highs and can't get back through. And now it looks like we're failing. So we're below the 40-week moving average. We're below the 20-week moving average, or right at it, which would be the center of the Bollinger Bands. And you can see that there's a little bit more support, just slightly lower than here, where basically we oscillated above and below. So I'm not happy with the shape of this chart, especially to end the month right here on the lows. And to have this PPO rolling over, I would say there's still a chance we could get a couple weeks where we just kind of go sideways and then break out to the upside. I'd be happy. But so far, to me, we're making lower highs and lower lows in momentum. And that's typically a structure where you, on your momentum indicator, when the left shoulder has the highest momentum, the head has lesser momentum, and the right shoulder is barely above zero or around zero. That is a real typical topping structure. So this is not that sort of chart pattern we want to look at and be optimistic. We need to be cautious here. You don't want to sell everything, but you definitely need to understand that the market is trying to tell you that it doesn't have the strength it used to have. And you can see that this 2-year trend line from the 2016 lows that, basically everybody has enjoyed, it's been a big run since then, is questionable. So now if we just move through a few other world charts, so here's the CAC 40 in France. And what we had here was a breakout to new highs and then lost it and came all the way back and closed at the bottom of the monthly bar. In terms of major momentum, we have a 10-year momentum line here that France is trying to break through and has been unable to do so far. We also have an uptrend line that I could draw in here, and it would be coming out pretty close to that uptrend line as well. And what I find is when you break these momentum lines, so if I drew one in here, when this was broken, we had a big market correction 2015, 2016. Well, now I can use a little bit flatter one and come in here. But the bottom line is we're very close. And you can see in the Zoom panel here, again, a monthly chart, and we're on a sell signal. So all of these things are concerning that Europe is going on a sell signal. And of course, we had the news out of Italy this week, which didn't help. So here's France on the weekly. And again, we're only day 2 of the week, or sorry, 4 days into the week. But the problem we're having is we're right on the lower end of the bar, and you can see that the 20 week and the 40 week are about to cross here. So we're sitting right on the middle of the Bollinger Bands, horizontal support. There's a lot of reasons to be cautious here. And once again, we have this momentum pattern of lower highs on each of the peaks. So this is a bit of a problem for us that we're seeing it not just in one market, but in multiple markets. The Dutch market, not really as big or as influential, but you see the same thing happening. We have a sell signal on their monthly momentum charts. Tried to make another higher high this month. Tried it, ended up closing on the lows of the month. That's just not bullish behavior, and that's a bit of a problem for us. If we look at the weekly chart, what we see on this weekly chart, again, the same series of lower highs on momentum. And so that's concerning, and a rollover right near zero would be a problem. Moving over to Asia, we get to China, and the Shanghai chart isn't very favorable right now. It's below the Bollinger Band moving average, so this dotted line ribbon through the middle here. And we've spent 2 or 3 months down here. Now we're right at the bottom of support. So if the Shanghai market was going to bounce off the lower Bollinger Band, this would be the time to do it. And that would be bullish, and that would probably help a lot of things in the world right now. But so far, this chart's a little weak. Okay, here we have the weekly chart. What we see here is a major support and resistance line I've drawn in for a while, but we also have this big topping structure. Excuse me, just one sec. Okay, and on this big topping structure, you can see momentum has gone negative on this weekly chart, and it doesn't look like we're going to get a positive cross here. So the problem with all of that is that if that's not going to cross positively, it usually means it's going to accelerate down. That would be a big deal for us. Let's go to the Hang Seng. On this chart, what we see here is this looks a lot more bullish. It's well above its 20-month moving average, but it's been consolidating for the last 4 or 5 months. We aren't testing the highs much like in the US market, but we're consolidating sideways, and we're right on we tested the 20-month Bollinger Band right now. So looking down at momentum, we still have a lot of it. We're well above. There's no sign of a sell signal on the Hang Seng market, but on the Shanghai market, obviously things are quite a bit weaker. Going to the Nikkei, which is one of the more risk on, risk off markets for us to track, what we see here is the monthly chart was pretty bullish. We had a gravestone top that I marked 4 or 5 months ago, and now we've run up a little bit, and we're still trying to continue to go higher. So we're still trying to test this top and see if we can get back up above it, but we're well above the 20-month moving average, so that's bullish. The problem we have on this chart is the momentum is a lot lower on this peak than it was back in 2015. Now, big long-term divergences like that are not necessarily helpful or not really usable for trading. But the more important thing to realize is that the market has a lot less momentum. And if it has less momentum, odds that we can continue to push straight up get more difficult. And that's where, by looking at the whole world, we can kind of get a better picture. Okay, going into the weekly chart for the Nikkei. So this is the Japanese market. What we see here is, we had this big push up, and we don't have that head and shoulder structure like we see in Europe. But what we have is it looks like the 20-week is about to fall below the 40-week. Now, maybe it could catch itself. Some of these other places where it got close, it bounced and took back off to the upside. But look at how low the momentum is on this last bounce. And we're still marginally positive. So the signal, the actual PPO line hasn't crossed below the signal line. So we don't have a sell signal yet. So we can't draw a trend line down here saying a confirmed peak. But we're pretty close. And again, the issue is that so much less momentum here. And you can see back in 2015 when we, just got above zero after coming down. and making a low momentum high there, the market just gave way for the next couple of weeks. So all of these charts are set up, I'll call it just on this edge where they could break either way. I mean, there's still room for them to bounce higher. You're still above the 40 week, but a lot of the indicators, the momentum indicators and that kind of thing, are suggesting that there's not a lot of momentum. So it really needs to get spurious here and have some real enthusiasm about going higher. I like to watch the Australia market because it does a lot of the commodities for Asia. And so we want to watch to see if that market is good and strong. Usually if Asia has commodity demand, then we've got a better place to be. And what we like about this chart is it has already broken a big 10-year downtrend line in momentum and broken out to the upside. That's this red line coming in. We have this support line that's just below it, and you can see we're still just barely riding that support line. So any sort of breakdown here would, just after saying we broke the 10-year uptrend line, we've also broken this 9-year downtrend line. So, or this 9-year uptrend, let me just inverse those, the 10-year downtrend and the 9-year uptrend line. That would be a problem if we started to break below that. That would really be a failed breakout, and we wouldn't like that. In terms of price action, Australia just recently broke out to new highs, and it's testing those highs. But you can see we spent most of the month trying to go up near the old high, and right now we closed in the bottom third of the bar. While that's not great, it's not as bearish as some of the other charts we saw where they slammed the close right on the lows or really close to the lows of the month. Okay, here's the Australia weekly, and I can just shorten this chart up here a little bit. Let's just zoom in on the last 3 years. The one point I want to make is here's the momentum line, and we've broken this uptrend for the last 2 years, and that's more problematic that we appear to be breaking that. So this looks like a final test of the high, and then we would roll over, is kind of the way I interpret that. Now, we'll zoom in on that. So what you see here is as we come up and back test this red line, if we roll over right here, that would be a big problem just because we've just touched zero, a very low peak in momentum, and then it probably means you want to accelerate down. Now, that could be a couple hundred points. We don't know how far that goes. What we're trying to figure out is just do we have enough momentum to make higher highs? And the momentum line is not really pointing up anymore. It's almost gone flat. And so what we need to see now is a couple of spurious weeks of action to really get this turned back, get meaningful momentum back to the upside very, very soon. The Canadian market, I'm just going to go through the weekly chart here. So we're trying to break through the highs that we set in January. And, we kind of rolled over so far because oil's been doing so well. Canada's been doing a lot better. But look at the uptrend line. It's already been broken, much like Australia, and it looks like it wants to roll over here. So it's one of the reasons that I'm concerned about the crude charts, because normally Australia and Canada have a little bit of influence on things like crude oil. They track pretty well. Oil's a big deal for Canada. So having this sit right here and unable to get back through, we're still watching it. It's not very bearish. I mean, the US markets have been moving down a lot harder than the Canadian markets this week. So there's a little bit of hope that that's going to improve. Okay, here's Brazil, and you can see Brazil has broken below, in this case, a 10-week moving average, 10-month moving average. But, that's pretty significant. It hasn't broken the monthly Bollinger Band, which is down here. But you can see on this PPO line, or MACD in this case, way up here, it looks like we're rolling over again. So that's a bit worrisome. If we look at it just briefly on the weekly, what you'll see is, we've clearly shattered the 40-week moving average, and we're trying to get some support here, but the PPO line has been broken for that 2-year level. And again, when that breaks, it's typically a pretty good sign to be aware of. So that broke in early, call it mid-April, and all of a sudden you can see just the washout as momentum plunged below that long term. So I think it's a pretty important place to be aware of. Now, maybe we get support down around the zero and this starts to bounce, but right now it clearly looks like it's falling out a bit. Russia's another big one. And this was some U.S. tariff talk, and pulled it down. And so what happened? I don't think it was just tariff. It was there were also some restrictions put on the Russian market, and so that's kind of pulled it down. It's bounced back up to support, and looks like it's failing at well, support was, now is resistance. And so if it fails here, that's pretty important. And you can see this 3-year uptrend line on momentum has been broken, and we're right at the zero level. So if it holds, great. If it rolls down, big problem. So I don't know how many times I've said that on all these charts, but we're literally at the inflection point for a lot of these things to either go higher or go lower. Now, when I show you the S&P 500, again, we have this big uptrend line. We've broken it in terms of momentum. That's in itself a bit of a problem, and we've already seen that. But the real question is, can we bounce out of here and turn back higher now? And that would be great if we could do that. So, you get lower momentum, then you kind of bounce up and you go higher and you continue to make higher highs. Momentum's not everything, but the big picture, when you can draw big, long 2-year trend lines and stuff like that, and you really start to break down, that gives you an idea that the momentum is being lost. But the real problem starts when you're gapping below zero or failing around the zero line. So that's what we're watching for. And again, we're not that high up. Like, it was kind of in May of 2015 that all of a sudden this fell below the 1% line, or below the 1% line. And you can see we're right at that level now. So if we're going to start rolling over here, that would be a bit more concerning. Anyway, just to kind of put all of that together in a nutshell, if we go around the world, looking through these charts, I have one chart list that's all set up, and these are monthly charts, monthly candles, and just the Bollinger Bands on them. And what I like to do really quick at the month end is just look and see, is everything above the 20-month moving average? So these are all US indexes, and they're all above their center, their Bollinger Bands. And when they're not, like back 2007, 2008, where everything started to break down, that was an important place. And you can see here in 2011, 2012, we were below. So anytime that happens, you want to be aware of it. Here's 2015, we started to break down. 2018, we've had a few months in Canada below that 20-month moving average, but we continued, this month we finished it up near the high, so that's bullish. So the idea being, you could just quickly look through and see how is the world performing, and if everything's above the 20-month, you should be bullish. And so we should be bullish because everything is still up there. Shanghai's a little weaker, but we're starting to see cracks, and that's the point, is a lot of them are living right on that line. So hopefully I've laid out kind of how I like to look at the global picture and what we need to watch for. Okay, I also said that I'd discuss some of the tariff talk that happened today around steel and aluminum. I think copper is just as important, but what we see in the copper chart is a topping structure that's been going on for almost a year now. And we're just sitting around the 10-week moving average waiting for that to get better. Here's the aluminum surge, and it looks almost like a heart palpitation, just ticking up and then down, and it's starting to level out. But you can see there was a little bit of a turn up today on the end of that chart. And if I go down to, there's one more that I want to show you. Let me just find it. This is coal and steel. And what you see here is this is the steel line in the bottom, and it did not inflect up here so far. It's still below the 10-week moving average, which isn't that good, but you can see that we've been trying to break out on steel for a while. This is the ETF, and there's a big 2-year uptrend that is starting to get threatened. And when it was, as long as it was holding above the 10-week, that was pretty bullish. The issue is we're coming back down near that trend line. So I'm watching to see, does the steel tariff talk actually improve this chart and we start to break out to the upside, or does this actually put pressure on it and roll over to the downside? The chart above here is coal. And you need coal to melt iron ore to make steel. You need, coal for smelting aluminum. You need coal for smelting copper. So all of this is a pretty important line. And, it was a sudden surge off the lows, but then it's kind of moved into a more orderly sideways direction, which is fine. Moving up nicely, no big deal. But what we want to watch for here is, does this line hold, or do they both break in tandem together? So far everything looks intact, but again, we haven't seen a positive surge in the steel area. This other two areas are lithium and rare earth metals. And the only reason I bring them up, not because they're part of the tariff talk, but these two charts are already in downtrends in industrial metals. And so I'm not sure if the tariffs are going to have the effect, or if it's already the fact that some of these other charts have broken, and steel is just literally joining the bandwagon of broken industrial metals charts, or if we're going to have more fallout. So I think that kind of issue is pretty important to be aware of. So I have one more view of this steel chart. And again, this is an ETF that has a whole bunch of steel stocks in it. And what we want to see on this chart, again, here's this big uptrend line that we have going on. And a couple weeks ago, I wrote nice high volume surge, but is this exhaustion? Because we had the high volume surge heading towards the highs in price, and then we were unable to do anything with it, and then it rolled right back over. So that was a bit concerning. But the other reason that I was concerned there was I'm worried about the broken PPO trend line. So on a weekly chart, you've got this uptrending line. That's important. But now what you have is a lower high on the PPO. So this momentum peak is a lot less than this momentum peak. And if we look up at the chart, the price was the same. So as we retested the highs, we had less momentum than when we made the highs. That's not usually how you're going to get through the previous highs. So you need more momentum to kind of push the market higher. So this trend line is coming into play again, and we're, whatever, we could get fine about it, but let's call it 46. We really want to see this steel SLX ETF chart hold 46, and we don't want to see this PPO roll over and kind of start slamming below zero. So I think when it comes to this tariff, try and avoid the news about the tariffs and watch the price action, because what we saw in lumber was the lumber price was going higher anyway. Lumber tariffs came in, and the lumber stocks continued to move higher even in the face of these tariffs, just because the underlying price was moving up. So don't use the news to try and tell you which stocks to own. If they start to break out to new highs, that's a better clue that we want to get on board. Okay, real quick, we have just under a minute here. The toy market was one of the better ones, and a lot of this is the electronic games. That's becoming bigger and bigger. Online gambling's really becoming big. It had a big month, and I highlighted it about a month ago, and it went on to have another great month, so I'm not expecting slowdowns there. I'll let you look through these, but computer hardware and semiconductors both continue to have a big, strong month and finish up really bullish. Railroad charts were great. I think the one problem I would have there is if industrial metals start to fail, then you'll start to see it in the railroads. Okay, that was kind of a commodities discussion in the last 5 minutes there, just because of the tariffs today. But with that, I would like to say thank you for joining us on today's show. The Final Bar airs live on Thursdays at 5 p.m. Eastern and can be found on the StockCharts TV schedule for your viewing convenience at other times during the week. It is also available on the StockCharts YouTube channel. And with that, have a great weekend and good trading.